How much longer does the current bull run in cryptocurrencies have left? Well, this is one of the questions I get asked the most on the channel, and in this video, I'm going to answer it for you. We're going to look at the charts. We're going to see a lot of data that makes me think there's actually much less time left than many of you might think. So without further ado, let's get started by taking a look at the Bitcoin chart. And I want us to look at the Bitcoin chart, and first of all, I want people to be able to understand that we are in a bull run, because there are still people who tell me that we're not in a bull run. And I'm like, my friend, we've had the chart going up non-stop on the weekly chart since 2022. Clearly, we are in a bull run, and clearly Bitcoin has already gone up 700% in about 2 years. I mean, it's had a stratospheric rise. So bull run, we are in a bull run. I think we can all agree on this, right? Well, the important thing here is to keep several things in mind. Bitcoin bull runs, and here we have the chart since 2011, are getting slower each time, okay? And this is the first thing to keep in mind. We're not going to look at the first one from 2009 to 2011 because it's too parabolic, since in the end there were very few buyers. But look, for example, the bull run from 2011 until it peaked lasted about 700 days. Because this one too, this was also a bit of a strange bull run since there was a double bull run, okay? I don't think that's going to happen this time, okay? But it was like a bull run of about 530 days, and then there was a second part of about 140 days. It's not the usual case, and as I said, analyzing Bitcoin before 2013 is strange because with so few buyers, it wasn't as solid, right? But look, right? Let's start from 2013. 2015, from 2015 to 2017, it was about 840 days of bull run as well from the lows, okay? Look at that. Then the next bull run as well, if we look here, from December 2018 to the peak, it was 1,000 days. We're talking about the first one being about 500 plus 100, so 600 and something, then 800, then 1,000. And how long has this bull run lasted? How much time has passed? Well, notice that we've already reached 1,000 days, okay? Obviously, it doesn't have to stop now. As I said, each time it's a bit slower, but it could be 1,100 days, it could be 1,150, 1,200. I don't think it'll be much more than that, right? So, here, we can already see that we're at the threshold of 1,000 days since we hit the cycle lows, so there's not that much left either. There's not that much left, right? Another thing to keep in mind. Bitcoin, from the moment it breaks its all-time highs, okay? And here you can see it clearly. From the moment it breaks its all-time highs, like it did at this point, it took about 280 days to reach the cycle high. When it broke the all-time highs again in 2017, it basically took 230 days to reach the cycle high. From the moment we touched here and broke the all-time high, it took about 300 days to reach the cycle high. So how long has it been since we broke the all-time high? If we count, for example, this breakout, which would be the real one, it's been about 290 days since we hit all-time highs, since we broke those all-time highs. So again, we're in the range of 280 to 300 days. As you can see, all the dates line up, so there's not much time left, right? Alright. There's another important thing to keep in mind, and that's, for example, the case of Ether. When Ether breaks its all-time high, if we look here, when Ether breaks its all-time high, like it did in 2021, it took Ether, well, just 280 days at most, to reach new all-time highs. But obviously, Ether is a bit different, right? What really interests us is that from the moment Ether broke its all-time highs, which was here in February 2021, what we actually want to know is how long it took Bitcoin to reach its own all-time highs, right? And Bitcoin, from February 2021, let's look at it right now. From February 2021, notice that it took about 70 days to surpass its all-time highs. We're talking about 2 months, 2.5 months. Here comes not only, now we'll continue with an analysis of Bitcoin itself and really how much longer this cycle could last. But I want you to understand that this time, it's not just about what happens in the cryptocurrency market. This time, something very important is also at stake, and that's what happens in the United States. Why? Because I'm bringing up this chart, okay? This chart is very important, and it's basically, in blue, you have the interest rates of the United States, okay? All these drops or increases in the US interest rates. And in black, we have the S&P 500. And there's something very important to mention here. Basically, and this is extremely important, we have the dot-com bubble and the stock market crash, the 2008 crisis and the stock market crash, the COVID crash, and what's happening now, which nobody knows how it will turn out, right? Alright, so I want you to understand the following. When the Federal Reserve is lowering interest rates, it's because it sees something wrong in the economy. Otherwise, interest rates would remain high, right? And look here, the drop in interest rates started in this red area. That's when the interest rates began to fall. Notice how steep the drop in interest rates was. And what happened to the market? The dot-com bubble burst, then interest rates went up again. And when did interest rates start to go down again? Here, in 2007. What happened a few months after this drop in interest rates began? Look here, we had the crash, right? Of 2008. What happened with COVID as well? With COVID, we should have had a recession, right? But we didn't have a recession because they started printing money. That's where the whole issue of inflation came from, right? But we had the drop in interest rates, and then shortly after, the COVID crash happened. If we look at it, this means something very clear. As soon as interest rates start to go down, we only have a few months of prosperity left before a recession. And this has been proven in all three of the previous times. Even if we look further back, it happened then too, right? So what we have here is that the Federal Reserve is going to lower interest rates, whether it's in September or October. But what that tells us is that by 2026, there will be a recession in the United States. That's the most likely scenario, and it's very likely, okay? In fact, you'll see that on my traditional investment channel, I'm going to release a specific video about why there will be a recession in 2026. And this is just one of the reasons. But the reasons are about why the Fed is lowering interest rates, right? This is what we want to know. In any case, 2026 is shaping up to be a pretty bad year. And you might say, but crypto, okay? Bitcoin is a safe haven asset. No, Bitcoin is not a safe haven asset because you can see it clearly on the chart. On the chart, we can see that when the stock markets fall, Bitcoin falls. When the stock markets go up, Bitcoin goes up, right? Bitcoin is not behaving like gold. Only two geeks like you and me see Bitcoin as a safe haven, but the market sees Bitcoin as a risk asset, so it's not going to perform well during a recession and will most likely suffer from it. So whether it hits a peak, whether the bubble bursts, whatever happens, one way or another, what's coming is a recession. And that's not going to have a positive effect on Bitcoin either, okay? In any case, I want to make something clear to you, alright? And I'm going to say something that might surprise some of you, or maybe you won't like it. Bitcoin cycles are bubbles, okay? Bitcoin cycles are bubbles. And why do I say this? Because we're still missing the final phase of the cycle. We can see how, when we hit cycle lows, the cycles become more and more exponential. The price rises faster and faster each time, right? They start with slow increases, then move sideways, slow increases again, and more sideways movements. Then comes a point in the last 2 or 3 months of the cycle when the parabolic explosion happens. And when you get the parabolic explosion, it creates a bubble. And bubbles don't necessarily have to be very bad. They don't have to be bad at all, but bubbles do burst. And that's basically why, when it comes down to it, when Bitcoin's cycle ends, it doesn't just correct by 30 or 40%, it drops by 80%. Why does it drop by 80%? Because the bubble has burst. But then, the bubble, in the end, it actually makes sense for it to happen. Because basically, miners start mining half the Bitcoins, there's a supply and demand shock, there's much more demand for Bitcoin, the price goes up, it's completely normal, but in the end, it's still a bubble, okay? And look again, see how the cycles start. It starts going up, then moves sideways, and so on, and then it rises, and in the last few months, look here, in about 126 days, which is 4 months, about 4 or 5 months, it goes up by 400%. What took 2 years to go up before? Now it goes up in just 4 months, right? Above all, as I said, the most powerful part of the bull run comes when when Ether in this case surpasses its all-time highs. When Ether breaks its all-time high and starts climbing and climbing, that's when we're already at the doorstep of the bull run, at the doorstep of the end of the bull run in this case, right? And as you can see, I repeat, from the end of January 2021, look at the difference from the end of January 2021. We're already around these areas here. We would just need a little extra push of about 80, 90, 100 days. We're talking about 3 to 4 months at most of bull run at this point, of the most explosive phase of the bull run, which would be all this phase here. That's what we still have left. And after this phase here, pay attention, because the bear market will come, okay? So I repeat, most altcoins usually, especially, tend to explode in this final phase of the bull run. That can be seen clearly with Bitcoin dominance. Look, right? We mentioned around January 2021. Look, January 2021 is practically the peak, the all-time high of Bitcoin dominance, and from this point we have the final phase, which is the long-awaited alt season, which has already started because I repeat, and I've told you several times, notice how dominance is starting to plummet, just like it started to plummet in 2021. Right now we are in this same phase here. This phase right here is where we are right now. Dominance has already dropped a bit, we're just missing the final phase, okay? So there are only a few months left, just a few months to go, but the best months are coming. In this case, for example, if we compare it to 2021, again, everything tells us the same thing. 90 days, 100 days. I don't think there's more than 3 or 4 months left. So what is my exit plan? Well, we have a target for each and every one of the cryptocurrencies. We have a target, which for example, I expect Bitcoin to reach $180,000. But there's always a nuance to this. There are 2 ways I would exit. Or Bitcoin hits 100. Well, actually, there are more like 3 ways for me to exit, okay? Either Bitcoin hits my target, 180,000, and I get out. Or more than 100 days have passed, and we're ready to start dropping, so I exit at the 100-day mark. It doesn't matter what price Bitcoin is at, I'm going to exit after about 100 days, give or take, okay? 100, 110, it might change a little, but more or less be ready for me to leave in about 100 days. This basically means that in October or November, I'm going to exit. It doesn't matter the price. If it hits my target, perfect. If it hasn't reached it, it hasn't reached it. Or third, that things get complicated before any of these 3 things happen. For example, if Bitcoin started to drop below the $100,000 zone, or if we saw that the US recession actually arrived earlier than expected and all that, then I would also exit the market. In any case, those are the 3 options. Either it hits my target, enough time passes for me to think we're done, or things get complicated. For now, how are we doing? For now, we're still holding. For now, we're still good. And for now, we're going to keep holding on because the best months of the year are coming. The best months of the year, which are September, October, and possibly November, which will also coincide with the stock market's bullish rally. And starting from October or November, things are going to get way too overheated. I'm gonna get out. There will be a terrible risk of recession in the United States. All the timing lines up, and for me, as I said, starting from October or November, that's it. The time for holding crypto is over. The time for looking for long cycle trades is over. All of that is done. From that moment on, we'll obviously keep going on the channel, we'll keep analyzing, we'll keep doing everything, but we'll already be focused on the bear market. Investing in the traditional way, like how you invest during a bear market. We won't be investing in altcoins, but we will be trading. We'll be trading shorts, looking for other types of opportunities, okay? But anyway, that's basically it. I just wanted to make it clear that while Ether breaking its all-time highs is good news, it also means that the party is coming to an end. So, well, expect that in 90 or 100 days, I'll upload a video saying I'm leaving the crypto market because, well, I'm going to sell everything I have. So that's it. See you in the next video. I hope you enjoyed it and see you soon, everyone. Goodbye, goodbye.